is just kind of starting with 9-4 notes here as far as what does the cash payments journal look like. So you can take a look at it. We got two general accounts, debit and credit. Those are just accounts because they're normal. They're not special amount columns because they don't have an account called general. Okay. We will have three account columns that have an account name above it. One's going to be accounts payable debit. So when would we use this account? When we're paying off our purchases, right? All right. So if I go into Hayden's store and I charge stuff to them, I increase accounts payable at the credit. When I pay it off, I will have to debit accounts payable to get rid of that bill I owe them, and then I'll credit cash. So we have a special amount column, accounts payable debit. We have purchases discount credit. Okay, what is a purchase discount? We're going to talk about it. It is for us to be able to take a certain percentage of the sale and pay it within a certain time frame. It's like an incentive to pay early. So a customer or a vendor of ours might go, hey, if you pay, you'll get a 2% discount if you pay within 10 days. So we'll go, okay, we'll pay less money. We figure we do that 4 or 5 times a month. Over X amount of years, you save some money. And then obviously, whenever we pay something with cash, we'll either write a check and credit cash, or, it might get taken out of your account. It might be a debit card, EFT transaction where it'll be a memo and it'll be taken out. Okay, so cash payments journal is this. It's a special journal that was recording all our cash transactions. These are the only columns we need for it. Okay, they talk about what is going on with these special amount columns that we just did. Okay, all right, some discounts, and this can possibly be a little tricky, so I want to make sure we explain this correctly. There are going to be two different types of discounts that we will take advantage of. We will take advantage of a trade discount, and we will take advantage of a cash discount. The trade discount, we will not record for whatever reason. We're not keeping track of how much we save. The cash discount, we will keep track of, okay? So, trade discount, what are we doing? It's the retail price is listed in the catalog and internet site. That's the list price. So like you go online, it says, okay, this is the price, right? Possibly in some industries, you can get some trade discounts, all right? Reduction from this list price that you see on the internet or on the catalog, okay? Where maybe you're a customer, a loyal customer, and you've been there and you paid all your bills throughout the, on time, and they're going to say, hey, we're going to reward you. We're going to, 10% off for you or whatever. All right. So a trade discount is just a reduction of this list price. The price after the trade discount has been reduced or deducted is referred to as the net price. So gross pay is the money before taxes, right? G, gross, comes before N, net. Net pay is the money you make after taxes. Net price is the amount that you would pay after the discount, okay? And they give us an example. If the list price was $500, the amount on the catalog, and we were able to get a 40% trade discount, okay, our net price, the actual amount we're paying, $300, so it's $500 list price minus the trade discount, okay, would mean we would pay the $300. So you're going to have to do a little math. Now, one of the things we used to, and it depends how you want to do things, but let's just use that one as an example. So how they did that is they took $500, right? And what they say it was, a 40% discount, okay? And they have a 40% discount. So you take 500 times 0.4, right? So 500 times 0.4 gives you $200, right? That's our discount. And then they would take 500 minus 200 to get what we owe, which is the net price. So this would be list price. This would be net price. When dealing with the trade discount, we don't record the discount for whatever reason. We don't keep track of, hey, we saved $200 on this. Okay. Now, other ways of doing this. Right. Can't see anything. But you could do this, right? If we're got a 40% discount, what percent are we paying? We're paying 60%, right? So in order to stop, instead of doing 2 steps, you can do 1 on these trade discounts, right? Does that make sense to you guys? You don't have to do it this way. But this is how I always think of it. When they say you got a 40% discount, okay, what am I paying? 60. So I'm just going to take 500 times 60 to do this. Because we don't need to know what the discount is. We're not recording the trade discount. Okay? But you'll have to do that. Either way, you get this 300 net price both ways. But this way you got to find the discount, then subtract. This way you already know. Now, if we needed to record it, I would tell you you should absolutely do it this way. But you can do the trade discounts that way. That's okay. Okay? And for whatever reason, we're not recording trade discounts. So that's what they're talking about here. Okay? It says only the invoice amount is used in the journal, the net price payment. Okay? And that's just a catalog industry type thing. Okay? When we're dealing with cash discounts, it's a little different. All right, when we're dealing with cash discounts, why people do it is to encourage early payment. They might offer it to us. A cash discount is a deduction from the invoice amount that the vendor gave us. All right. Cash discounts will be when we're purchasing goods, or called purchases discount. Okay. Because it reduces the cost of the merchandise when we purchase them. So you got to kind of think here a little bit. So I'm going to go to Lauren's store. I'm going to charge $5,000 to her, right? I'm going to record that into my purchases journal. Lauren then gives me a bill saying, hey, 210 net 30. You can take 2% of that off if I pay within 30 days or 10 days. Otherwise, the whole thing's due in 30 days. 210 net 30. We'll talk about it here in a minute. So the discount, if I was to pay that within 10 days, we would keep track of that. And we would record it because I bought merchandise that I'm going to sell from her. It lowers our cost of merchandise, right? When I pay it. We record the $5,000 account payable in the purchase journal. We take advantage of it. If we decide to take advantage of the discount, we will record the discount in the cash payments. Okay? Because you can't just say, "Oh, I'm going to pay it." Well, they don't care. They're going to take the money when it's due. I mean, whenever they're not going to take your word for it. So we're going to record this discount when we pay it. But when we do take advantage of discount, it lowers our merchandise costs. Instead of paying $5,000, I'm going to pay 2% less. Okay. And they're kind of talking about all this stuff. We're going to use the general columns when we pay like utilities, rent, supplies office, supplies store, all those debit expenses and crediting cash are still going to be used here. All right. And that's all they're talking about with that stuff. Source document most often used will be a cash payment. With the cash payments journal is a check. Occasionally you'll have a memorandum when you pay things online or have fees charged to you. Okay. So regular cash payments, transactions, a couple of them. Paid for advertising expense, debit the expense, credit cash. That's nothing new. I'm not going to go through the steps of marking that. They show you the T account. Again, just as rough reminder, we're increasing expenses with debits. decreasing with cash. You use the general column, and you have the cash credit. That is nothing that you haven't learned already, okay? The next transaction, wrote a check to Wells Office Supply for store supplies. Something a little bit different. We used to always say supplies. Now we will say store supplies or office supplies. We're going to get a little more specific, okay? So supplies are not recorded in the purchases account. We got to make sure we keep those separate. Okay, supplies are not intended for resale. We're not sending markups, right? We're not adding prices to it. We're using those to make money. But we will have to signify now either office or store when we debit supplies. But you're crediting cash, same thing as always. Check is usually written. So that's not new, other than you're going to have to make sure you say office or store. And then when you post, you got to make sure you post it in the correct office or store. Okay? So those are a few transactions. Now, before we said we we're going to put all purchases on account in the purchase journal, right? Well, sometimes we might go to a different town, different company, or we just want to pay cash. Like somebody might not want us to give us credit, or we don't have store credit, or we don't want to pay, we just want to pay cash for merchandise. So if we, like on November 9th, it says we purchased merchandise from Polar Refrigeration for cash, $480. And you're like, well, wait a minute. I thought all purchases were on account. No, sometimes we'll pay with cash. But if we pay purchases with cash, we're not going to the purchase journal. That's for account. So we just write the purchases and record it so that we will increase purchases and we decrease cash. So there's two different times we will use purchases. One, when we purchase on account, we'll go to the purchase journal. And then when we purchase merchandise for cash, we'll be in the cash payments and we'll just debit purchases. Either way, remember what purchases is the normal balance is a debit. Okay? So there's quite a few different transactions. Again, these are just the same reminders. Only purchases on account are recorded in the purchase journal. Only cash transactions are reported in the cash payments journal. Just friendly reminders. Okay? All right. So now, I mean, not that these aren't new, but they're not probably new concepts for you. This is going to be one that we're going to have to make sure we think about, because we are going to use the accounts payable debit and the purchases discount columns. Now, what you want to do and what you want to kind of try to remember, zoom in a smidge, is debits have to equal credits, right? That's always been our assets equals liabilities, owner's equity, debits have to equal credits. So accounts payable debit, and then if we use these two columns, these two credits must equal the debit. You agree? Okay? When we take advantage of a discount, the accounts payable bill is not going to change with the payable being we need to get rid of that bill. The amount of money we're going to give them, if we're going to pay them less because we're taking advantage of discount, the cash will be less than our bill, right? So we need to record this discount. So the two credits need to equal the debit. Okay? So cash discounts usually stated in a percentage of the invoice. I got to try to keep that there. So these are the examples. Almost always it'll be 210, 110, 310. Rarely is it higher than 1, 2, or 3%. But 210 and 30 means 2% discount of the invoice may be taken off if it's paid within 10 days. And 30 means the entire or net bill, the net bill, needs to be paid within 30 days. So you can get 2% off if you pay it within 10 days. If you don't, that's cool, whatever. But we're going to need all the payment in full during the N30. Now, what will happen after that? They might charge you a fee. They might charge you interest. It just depends, okay? The discount period, the period of time between when the customer may take the cash discount is called the discount period. So that's the 210. The 10 days is the discount period. Net 30 means is the total when it needs to be paid. So they won't go into explaining 210 net 30. You'll just have to kind of remember that. 2 is the percentage. First number is the percentage. Could be 1, could be 3, whatever they give us. And then we just have to make sure we pay the bill. But debit needs to be the credit, needs to equal credits. Purchases discount is our new account. Okay? We said purchases is, but I don't need to write it probably, but purchases is a normal balance of a debit. Whenever you have a contra account, the opposite needs to occur. So if we have purchases and we say the normal balance is a debit, purchases discount is the contra account, meaning it will do the exact opposite. Okay, and we'll use purchases discount when we take advantage of that 210 net 30. So purchases discount is what we call a contra account, an account that reduces the related account. Okay, so we will do a credit to purchases discount. Okay, so this new account, whenever we take advantage of the 210 net 30, we will credit purchases discount. Okay, and that's what they're talking about. When a company that has purchased merchandise on account takes a cash discount, we're going to take the purchases discount. Okay, they're recording the general ledger. This purchases discount is a contra account because it reduces its related account. Another one we'll have next chapter will be sales discount. And sales is a credit balance, so sales discount will be the opposite. Anytime you have a contra account, it'll be the opposite. Okay? On the income statement, the balance of purchases discount is deducted from the balance of purchases. And when we're trying to figure out cost of goods sold, all the money we spend on purchases minus the discounts. That'll be what we do. That's just kind of things we're going to think about later. Since contra accounts reduce and deduct the related accounts, their normal balance are the exact opposite. I guess I've already said all that. Since purchase is a debit, purchase discount will be a credit. Okay. Is there a T account up here? Yeah. Okay. So here's what we're going to do. Paid cash on account to this Galley Electric for $627. So right away, you know that's the cash, right? We paid cash on account to $627, covering the purchase invoice $498. People get confused because they go, "Wait a minute! You said a purchase invoice. I went to purchase." No, it's covering what we've already charged in the purchase journal. That's what they're telling you there. Okay. Our bill was $640, but we took advantage of the 2% discount. So when you take 640 times 0.02, you get $12.80. Now, in mastery problems, it is possible that they won't give you one of these three numbers. They might not give you $627.20. They might say, paid cash and took advantage of the 2% discount on purchase invoice for $640, period. So if they give you this number and they tell you took advantage of the discount, you take the total times 2% to find the discount. You subtract the 2 to get the total that you're paying. Now down here, they kind of show you how to go through this. The invoice amount times the 2% discount gives you the purchase discount that we'll credit. The amount that we were going to pay, this is our accounts payable debit, and then this is the amount that we're writing our cash credit. So purchase discount credit, cash credit, accounts payable debit. Debits have to equal credits. They show you the T account there. Purchase discount and normal balance is a credit. Cash, we're writing a check not for the total bill, but for 2% less. So it's kind of you save $12. Do that 5, 6, 8 times a month times 12 months. Save a few $1,000. Okay. That cool? All right. Couple other things. Like I said, they give you one section where all you do is total stuff, and then the next section has 16 journal entries. Cash payment on account with purchases discount. Okay. When the vendors give us a discount, or there is no discount, some don't offer discounts. Okay. And if they don't offer a discount, so this S&R Endpoints doesn't offer it, so we're just going to pay the bill, which is fine. Some people just pay the bill. You don't have to take advantage of every discount. Okay. So if it might say stuff like terms are N30, you're like, well, wait a minute. What about the 2% discount? Well, they might not offer it. They just say that your bill's due within 30 days. Okay, that's fine. So we pay the bill off, and you just write a check for the full amount, and you take it off the accounts payable debit. Okay? You'll credit or you'll list the account vendor as the person that you're paying off. So if you went in the store and you still owed them $2,512, you paid them off, you write it as a debit to the payable, and a credit to cash. We're just not taking advantage of any discount. Wrote a check to S&R Imports to pay the amount. Purchase invoice, again, they're giving you the purchase invoice check number. They might do in a mastery problem is not even give you amount. They might make you go back to your purchaser's journal and go find the invoice and see how much money you owe them and then pay it. Okay? Well, that's pretty self-explanatory. We're paying a bill. Debiting the payable, crediting cash. We did that stuff before. We're just kind of doing it in different, and that kind of shows you what's going on. You're lowering accounts payable. We don't owe them that much money anymore, but we also lowering cash. And they give you the steps. All right, we got 2 more transactions. One's credit card fees. Not sure why we get into this so in depth. Sometimes banks or credit cards will give you a fee or a transaction, not necessarily something that you write a check for. You guys that are going to college and stuff, you guys got to be careful on your credit cards, because you could get taken advantage of. There is enough reputable banks and things where you can find credit cards without fees, if you so desire. Okay, now it's tough when you're first starting out, because then you don't have any credit, so they kind of the whole idea is to screw you. So just but you got it. People use them, take a bit, but you don't need to have a credit card with a fee. There's enough of them out there that you don't need fees. It's all just things for 3 years, 2 years down the road. But we're going to just pay this fee, but it's just charged to us. It's charged to our account. So we're not really writing a check. We're figuring out we got a memorandum. We analyze the bank statement showing a credit card fee expense. We didn't write a check. It was taken out of our account, so it's a memorandum. Now, that doesn't mean I can't pay my bill off with a debit card, which would be a memorandum, or pay over the phone with electronic funds transfer or the internet, okay? Those would all be memorandums. And this is just like always. Debit the expense, credit cash, okay? And it's got the steps. We're not going through all that. And then petty cash. We talked about petty cash in chapter 5, right? We talked about cash short and over. Do you remember cash short and over? It says cash short is on the left, and over is often written like that, right? You can see that right here. Cash short and over. So if you're doing a T account for this transaction, if you're short, you debit it. If you're over, you credit it. Just reminder, right? So when you're doing and replenishing petty cash, you establish petty cash by just debiting petty cash and crediting cash. But at the end of the month, we will always replenish it. You establish it once, you replenish it the rest of the time you use it. So you list all 3 expenses in the debit. It says you have a cash short or over. Over is when it's negative. So we started out with $250. We have $215.13 worth of payments. We should have $34.87. We really have $35.18. So we shorted somebody some change. We didn't give them enough. So we are over 31 cents, which means I don't have to replenish it for 215. I got to replenish it for 214.82, right? You're just saving 31 cents. You kind of screwed somebody over and didn't give them the right change. Okay. It happens. They give you more at the gas station or something. Yeah. So you got the 3 debits here, but and you don't really have to have it memorized, like I said. If you think of short and over, short on the left, over on the right. If it's over, you will credit it. And then obviously the 2 credits need to equal the 3 debits. So when we do our cash payment, I think they talk about it here. Paid cash to penny cash, $214.82. Right away, I'd go credit cash. Then it says you have advertising expense, store expense, miscellaneous expense, cash over. So again, you don't have to memorize cash over. Just remember shorts on the left, overs on the right. So shorts a debit, overs a credit. Okay, and you go up here and list them. Cash, short, and over is the account. If it's short, you debit it. If it's over, you credit it. Okay. I guess I did mention cash, short, and over is a temporary account. What we mean by temporary account now that you did closing entries is that when we use it, we will close it. It's an expense. But that hopefully makes sense. All right, that's a ton of stuff. That is 9.4. We are not going to get through, we're not going to pound through this. What we'll do Monday, this will be a good way to review it. Okay, that's 9.